friends in media and our analysts and, our other guests, including the executives of SM. Before we start, I'd like to introduce the members of the panel. We have our president, Mr. Harley C. Of course, our beloved CFO, Mr. Jose Sho. And to the extreme left is the Vice President for Senior Vice President for Investor Relations of BDO, Mr. Chito Reyes. We have the President of SMDC and CFO of SM Prime, Mr. Jeff Lim. We have the President of SM Supermarkets, Mr. Joey Mendoza. And the President of SM Store, Mr. Jojo Mendiola. So we'll have a slightly different format today. What I'll do is I'll talk about the consolidated numbers, and then, by the way, we also have here on this table some of the other executives of the group. We have the Investor Relations Head of China Bank, Mr. Alex Escucha. We have First Vice President for Investor Relations of BDO, Mr. Bernard Chai. We have Mr. Dave Rafael, who heads the Commercial Properties Group. We have Mr. Ray Villar, Executive Vice President for SM Hotels and Conventions. And we also have Mr. Robert Cui, who heads SM Hypermarkets. And we have Ms. Lizzie Yu, who works with Jojo Mendiola in the SM Store. So what I'll do today is share with you the consolidated results of SM Investments, and then later I'll call on the different business heads to talk about their corresponding businesses now. As of the first half, SM Investments reported a net income of 12.6 billion pesos, growing by 16%. This is a higher growth that we saw from last year of only 13.2% in the first half. And this is based on revenues of 122 billion pesos, also up by 16%, coming from a growth of only 14% in 2012's first half. If you look at the growth drivers this year, I guess the unexpected growth of SM Investments was largely driven by BDO because of the very high net income that they reported in the first half. And Chito and Bernard are here to talk about that more later. We also have a very strong performance of SM Prime, the malls business. And of course, the other drivers are property and retail. The net margin of SM Investments is more or less the same at about 10.3%. EBITDA increased by 26% to 30 billion pesos with a net margin, EBITDA margin of 24.7%. The total assets of SM Investments increased by 10.3% to 386 billion pesos. Sorry, 426 billion pesos. And the net debt is still at about 36% of equity. So it's still a very conservative balance sheet, and this has always been the trademark of SM Investments, being a very conservative and prudent financial manager. Return on equity is about 12.6% compared to 13% last year. Okay. Now, for the retail operations, they reported first half revenues of 13.3% increase to 83.6 billion, and the net income of 3.1 billion, which grew by 9.9%. And we now have 209 stores nationwide. Before I proceed to the other sectors, may I call on Mr. Jojo Mendiola and Mr. Joey Mendoza later on to talk about their performance for the first half.
Okay. For the SM Store chain registered 6.1% growth for the first half of 2013. As you can see, it grew by 4.2% in the first quarter and 7.6% in the second quarter. Sales coming from Metro Manila comprised 53% of total business, and we expect this to move to a more balanced distribution as we open more stores in the provinces. Retail footprint grew by 37,800 square meters, with the expansion in Bacolod, Ora, and BF Parañaque in November of this year. And additional stores in 2014 are Kawayan, Cabanatuan, and San Mateo, Rizal. We have continued our focus on building a strong portfolio of private labels for various segments supported by various products, product development, and marketing campaigns. So we have there the SM accessories and the like. As far as store design is concerned, we are also redefining the customer shopping experience as we roll out the modern store designs in the new stores that we open and in the ones that we will renovate. If you've seen Aura, this is the new store design. Our marketing efforts are aimed at engaging new customers with focused initiatives while nurturing our core customer base. We achieve this via a combination of high-end imaging through celebrity endorsers like Sarah Jessica Parker in Aura, and tie-ups with upscale brands like Singapore Airlines and exciting promotions that incentivize purchases. The strong peso appreciation of 7% in January of this year affected our sales growth as it impacted on the spending power of the OFW families who rely on remittances from abroad. We see an improving growth trend as the dollar gained ground versus the peso in the succeeding months. As you can see, as the peso versus the dollar depreciated, the sales grew as well. So there is really a direct correlation between the value of the peso versus the dollar.
We were told that we were under the radar so much, so we'd spend a little bit more time talking about the food group this morning. First of all, the food group is composed of 4 banners. You have Hypermarket, Supermarket, Save More, and very recently, Walter Mart. For purposes of this presentation, the figures will only incorporate Hypermarket, Supermarket, and Save More. The reason why we haven't folded in the Walter Mart numbers is that the relationship is still quite young, and there will be still some ground to cover it. No? Perhaps in the future we will already be incorporating that. Okay. First half sales were pretty good. Consolidated sales of the 3 banners grew by about 6.8% compared to previous year. And if you look at the numbers, this has been pretty healthy. We continue to remain profitable, though there has been a little bit of dip in the margins. And this is temporary, as the first half normally is a challenging period for us. It's always in the second half, at the height of the holiday season, where we are able to sell more and then be able to charge better margins. Okay. In terms of penetration, you're talking here market share, according to a third-party reader, Nielsen in particular. The SM Food Group still continues to be the most preferred brand of choice, whether it's Hypermarket, Supermarket, or Save More, among the Philippine population. We have about 14% in-home penetration as compared to our nearest competitors at 9 and at 6. Okay. The latest reading was done in May, and we were told that June readings will indicate about the same. In order to be able to carry on this business, we have to sustain shopper patronage. And let me just walk you through the main strategies, the main legs that we have. We have 5 major principles that we follow, much along the same line as depth store strategies. We go where the shoppers are. And do I have a visual now? Okay. we go where the shoppers are, which means we now have 162 branches nationwide. I was going to make a song and dance about the Lawag Hypermart store because it's a heritage building which the LGU in Lawag partnered with us to transform it into a more productive asset for them and a selling area for us. Okay. Our nationwide reach is from Tuguegarao all the way to down south to Jensan. And we have 163 stores broken down as follows. If you're going to ask us about the split in business naman, supermarket contributes 45% of the consolidated food retail group business. Hypermarket would be about 25, thereabouts, Mr. Kui. And then Save More would be about, in the same area, about 20. Okay. First half, we opened about 9 stores, and we look forward to opening more stores in the second half. We also give what the shoppers want, and here's a very quick visual presentation of what we give them, anywhere from a wide range of goods, from basic groceries, organics, meat and poultry, importeds, ready-to-cook and ready-to-eat meals, household and apparel, food service and institutional items, fresh produce, SM bonus, and specialty items. The last 3 categories, let me just highlight this because more often than not, we are dealing with small and medium enterprise suppliers. And more than just buying the stuff from them, we also are involved in nurturing them to become professional in terms of being able to supply us according to the specifications we want, at the time and place where we want them delivered, and all told, helping improve their processes. Compared to the multinationals, dealing with the SMEs, it's more challenging, but at the same time more gratifying, more rewarding for us. So we have about over half of our suppliers are SMEs. And it really gives us satisfaction if we see them grow in terms of the business that they have with us. We also have improved our surroundings. What you're going to see now are photos of our recently opened Aura supermarket, our supermarket at Aura. Pleasant surroundings, wide aisles, modern design, all conducive for shopping. And we are going to take design themes and efficiencies from Aura and transfer them to our new stores and to the stores that we will be renovating and expanding. We also do relevant promotions. I have a nice shot here of a lady smiling with all the promos, and we have a highly effective shopper loyalty program which is based on our SM Advantage card. And we have a fantastic loyalty program which is based on the SM Advantage card. According to our affiliate, MCI, there are about 5 million unique members, card-carrying holders of the SM Advantage card, and we tap them in order to sustain our business relationship. Okay. We also offer one-stop shop services from bills payment, forex, remittances, a pharmacy, 99%, it's a Watson's. Full banking services. Very recently, we entered into a partnership with our affiliate, China Bank Savings. We opened a full-service bank in 4 of our Save More stores. This is fantastic because they can offer customers in that area full banking services while they do their shopping. And we're programmed to do 16 Alex for the balance of the year. Yeah. In order to sustain all these offerings, we have to be consistent, reliable, and innovative. And we do this in our selling area where we have new selling initiatives. This is the famous S-line, where we try to limit the checkout process to at least 3 minutes minimum to 5 minutes maximum. If it goes beyond that, then we'll have to fix it again. Okay, our customers have told us that this is apparently working. We also are heavy into food safety. The slide would show you spit guards. Very small item, but this is one way of making sure that what we sell is safe. What you bring home to your families is also safe in terms of fresh produce that we carry. We also are into humidifiers. Humidifiers help keep the veggies fresh. Again, small things, but this adds value to the shopping experience. Okay. We are a tech-enabled internal process. We're SAP-based, and we continue to invest in technology to help us become more efficient. We also have a very robust supply chain infrastructure, which allows us to deliver from our bases 6 distribution points in the Philippines to our stores as far as Tuguegarao or Jensan, and allows us to price our products at one level, allows us to keep an out-of-stock situation virtually 90% most of the time, allows us to also supply fresh products, really fresh. No? So this is something that we keep on building. We run it ourselves, but we also are into partnerships with third-party service providers and also with our suppliers. At the core of all this is our talent, our talents. We have a talent for service, our people. At any given time, we have, at the max, we have about 17,000 people working for us, whether they're cashiers, baggers, supervisors in the selling area, or in the back room. It goes down a little pag off-season, but at peak season, we have about 17,000 people working for us, which makes us one of the largest employers in the group. And they go through training which further deepens their sincere concern for shoppers. What you see are our payong boys. These are the guys you see in the provincial Seymour stores. Pag mainit yung araw, andun sila sa labas ng parking area providing umbrella service to those coming down. Whether it's raining or hot, nandun sila. And this is a huge differentiator for us because it emphasizes the service proposition that we offer to the community. Okay, we let them also go through training, and we also are an active member of the community. Very quickly, we have a positive impact on the community. 70% of our employees are locally sourced. Where the branch is, that's where we hire. And we are also a platform for local entrepreneurs. And our efforts have also been recognized. Some of the awards that were given to the stores, the Caritas Award for helping out the Catholic charities, the Green Campaign, where we are strong advocates of the green bag and reusable receptacles for products. We're now the Zero Basura champion very recently because of the efforts to recycle. And we're part of the SM Foundation's effort to grow 1 million trees. Yeah? And very recently, the DTI has given us Gold Bagwis Awards, Silver Bagwis Awards, and Bronze Bagwis Awards across our branches. Just like Dep Store, we have been recognized for service excellence. Our biggest strengths, siguro, would be our synergies with our affiliates and partnerships with third parties. Affiliates like Watson's, Pet Express, Ace Hardware, Toy Kingdom allow us to have offerings which other stores cannot duplicate. Our partnerships with providers like Western Union, HMR Surplus Depot, and colleagues like SMDC again strengthen our position. For our sites, we partner with, of course, SMDC, entities like the Consunhi Group and the Eaton Group. Eaton is Lucio Tan. DMC, of course, is DM Consunhi. And they allow us to look into sites which give us an advantage. Finally, we also partner with our banks, BDO and China Bank Savings. And if you summarize it, if you're looking for a sustainable competitive advantage, I think this is one of the strengths which other competitors cannot duplicate. So that's a snapshot of the food group. If you have questions later, then you can sit down with me. Okay, thank you.
So the next sector that like I said, the banking group actually was the main growth driver for the first half, and the main component there, of course, is our main banking arm, which is BDO, which reported a first half net income of 14.1 billion, and that surged by 144%. Gross loans grew by 12% and deposits increased by 17%. And they have a capital adequacy ratio of 18% in total. So may I now call on Mr. Bernard Chai to do their presentation for BDO.
Good morning, ladies and gentlemen. Although the business of banking is nowhere close to the exciting notion of traveling into space, BDO's performance at the start of the new millennium can be compared to a space shuttle mission. Like the space shuttle, the mission is dependent on three major components to get us to the Earth's orbit. The space shuttle itself, number one. Number two, the solid rocket boosters. And number three, the three RS-25 main engines. Fortunately, no video here. After the launch of BDO during the mid-90s, with the attainment of the commercial banking license, the bank's rise over the past decade got a big boost from various M&As. The most significant being the EPCI Bank merger in 2007, transforming BDO from a niche player to a true banking contender. Also, we focused on developing our brand for better customer recognition and association. Finally, more emphasis was given to investments for our main operating system and improvement of our production capacity during our initial startup phase. Having completed the fundamental setup, we can dispose of, in this case, I was supposed to show the disposal of a rocket booster. We can now dispose of our rocket booster since we got that big boost and proceed to rely on our main engines of growth or core business to take us to our destination. Fast forward first half 2013. After getting one last boost from our extraordinary trading income in Q1, our H1 net income surged to 14.1 billion or 144% H1 year-on-year. Nonetheless, despite this unique performance, we are confident that given the current favorable economic environment, our growth is sustainable and our core business will see us through. We earlier mentioned the Philippines' current macroeconomic setting as conducive to sustaining our earnings growth. And we'd like to mention the following positive factors that is key to driving our predominantly consumption-driven economy upwards. Number one, a resilient 5 to 6% annual growth in OFW remittance. Second, a projected growth of around 20% for the BPO sector. Government spending is likely to increase from 3% to 6% in GDP in the next 3 years, and hopefully with a faster rollout of the PPP that initially already consists of 190 billion in identified projects. And with this clear skies as backdrop, we can expect sustainable earnings from the following core business. Net interest income from our lending activities. Fee income from some businesses such as transaction banking and asset management. And of course, the recurring trading and FX income from our treasury businesses or business. For the net interest income, historically, we experienced double-digit loan growth since 2010. However, despite the loan growth, net interest margins began to compress during the same period due to certain market factors. Therefore, we experienced NII as flat during this period of time. However, the good news is, with market normalizing, we now see net interest margin stabilizing. And with the continued loan growth that we're experiencing, we saw NII or net interest income on the rise. And because of this, we feel that we have a better future. Loan growth is expected to continue due to potential project finance related funding requirements and the expansion of medium-sized businesses. Also, we see an increase in consumer loan demand due to the steady expansion of the middle class brought about by sustained remittances and the BPO sector. And here we show you the home loan, auto loan, and small business loan that BDO can offer. With loan growth on one hand, we also see our cost of funds go down through the increase of our CASA composition to total deposit. CASA basically is our low-cost deposits as a proportion to our total deposits. This will also help stabilize our net interest margin. Our composition for CASA has gone up from 48% of total deposits to currently at around 63%. And of course, this was largely enabled due to our extensive expanding branch network. Our low-cost deposit base is due to our 784 branches around the Philippines and one in Hong Kong. And being the BDO trademark, we are able to also generate deposits from our longer banking hours and weekend banking. The goal here is really to capture low-cost deposits and to cross-sell other banking and lending products to our customers. The second engine of growth is our fee income. We see increasing fee income as we see robust growth from our fund management or trust group and wealth management private banking businesses. We also see good income prospect from our transaction banking via BDO debit card and our online banking and cash management solution. And of course, we can never emphasize enough the steady growth in the remittance business, of which BDO has around 30% market share. Here, we also show the opportunities in the increasing fundraising activities via fixed income or equity through the capital markets, as potentially our PPP will be rolled out pretty soon. And of course, lastly, we cannot discount the fact that there is improving income contribution from our subsidiaries, mainly BDO Insurance Broker and Generali Philippines. And so we proceed to the third engine. The third engine is what we mentioned earlier as the recurring trade FX income. In our treasury business, not all trading income are extraordinary. We do have our recurring trading and FX income, which on a year-on-year basis would be approximately 10 to 20% growth. And here you could see it from Q1 of 2012 to Q1 of 2013 and Q2 of 2012 to Q2 of 2013. Once again, we draw some parallelism with the space shuttle mission. Having reached the Earth's orbit is by no means reaching our final destination. From here, the space shuttle also needs to rely on its orbital maneuvering system for added support. And what is that to BDO? This is similar to getting the much needed support from our non-revenue generating area of the bank, or mainly risk management. Through the years, the bank has consciously undergone a process to improve its asset quality and capital in order to have that edge and flexibility to support the anticipated growing banking requirements of our customers under the new Basel III regime. And what do I mean by this? We have seen our asset quality improve through the years. From 2011, it has gone down from 23 to 19.4 of our non-performing loans. Likewise, NPL ratios have actually gone down as well. And for prudence, our allowance have gradually increased. And this is a conscious effort in anticipation of any unexpected external shocks, such as the 2008 global crisis. However, with our cover increasing to 147%, this basically just gives us the flexibility to gradually trim down our provisions when management sees fit, which ultimately can reduce our credit costs. So at least that is the flexibility that we have. And lastly, also in anticipation of the implementation of Basel III, we have carried out some capital buildup exercise prior to the run-up in rates, thereby giving us more flexibility in meeting the challenges that lies ahead. So, in summary, with an encouraging macroeconomic backdrop, we are confident to hit full-year target through our diversified and sustainable earnings stream. Supported by improving asset quality and a strong capital base, and controlled costs and economies of scale with our current operating platform. 20.4 billion, that's our mandate for 2013. And with that final note, we'd like to commence our docking sequence. In this case, unfortunately, there is no video to show. But with that, I just want to say thank you very much, and that's BDO's presentation.
Thank you, Bernard. Certainly a lot more flair now from BDO. Okay, so back to our SMIC presentation. We'll now go into the property business. Okay, so as you already know, we've announced the consolidation of all our property assets into SM Prime. And so from 5 core businesses, the idea is really to bring it down to 3, with SM Prime as an expanded property company holding the malls, the residential, commercial, and all the other property investments that we have. And so I'll now give the floor to Mr. Jeffrey Lim to discuss the details of the property business.
Okay. Good morning, everyone. Apart from giving you an update on the property group, I'd like to first give you an update on the progress of the consolidation. With the expiration of the tender offer period on August 2, we are now at the final stage of our consolidation. We have submitted all documentary requirements to effect the consolidation with the Securities and Exchange Commission. We hope to actually receive approval hopefully by end of the year. We believe that the integration of our property business under one platform will enable our various property business lines to have the resources, the organization, and the flexibility to capitalize on the opportunities that the resurgent Philippine economy presents, particularly in the area of mixed-use development. As shown in the chart, the enlarged SM Prime will have 5 business units: shopping malls, residential development under SMDC, commercial development under SM LAN, hotels and conventions, and leisure and resorts. Part of our overall strategy is to use all these core segments for us to engage in integrated projects we call lifestyle cities, just like the Mall of Asia complex, and one that we are already replicating in Cebu. In Cebu, we are now developing SM Seaside City, a 30-hectare mixed-use project which will be home to the largest mall in the southern Philippines, as well as various residential, commercial, and tourism developments. With our business units working together as part of one team, we aim to embark on more lifestyle city across the country in the coming years. Let me now talk about each of our core operating units. Our mall operations turned in a robust performance for the first half of 2013. Revenues expanded 14% to 16.6 billion, driven by a healthy same-store revenue growth of 7%, and boosted by the expansion of mall space in 2012 and in the first half of this year. Net income, meanwhile, grew commensurately by about 15% to 5.6 billion pesos. The scale of our current operation in the Philippines can be seen from this slide. Our 47 malls, which are home to more than 15,000 tenants, now attract a foot traffic of about 4 million daily. In China, our 5 malls attract over 200,000 customers a day. The first half of the year saw the opening of our retail space in SM Aura. This aims to be the first SM Prime development to be certified gold by the U.S. Green Building Council, or LEED standards. It adheres to a high standard of environmental responsibility, with pollution and waste management minimized throughout each construction and operation, and significant energy and water savings realized through innovative use of technology. In the second half, we will be inaugurating SM CTBF Parañaque and SM Megamalls Building D expansion. By the end of the year, we will have 48 malls in the Philippines with a gross floor area of 6.2 million square meters, or an increase of 8% from 2012. We continue to be upbeat in China. Our 5 existing malls have performed very well, owing to improved mall productivity and lease renewals. Our 3 malls in Xiamen, Jinjiang, and Chengdu have now an average occupancy rate of 93%. The construction of SM Zibo and our largest mall, the SM Tianjin, which will be 540,000 square meters, is well underway. We plan to open SM Zibo in the latter part of next year and SM Tianjin in 2015. These 2 malls will expand our China gross floor area by 160% to 1.5 million square meters in 2015. Okay. Moving on to the residential business, SMDC posted a 6% increase in first half net income to 2.8 billion on revenues of about 12 billion pesos. SMDC currently has 13 ongoing projects in Metro Manila and 1 in Tagaytay. In the first half, we sold a total of 4,600 units. We also launched phase 2 of Grass Residences, and we are going to launch in the second half Shore Residences and expansions of Win Residences in Tagaytay, Field Residences in Parañaque, and Grace Residences in Taguig. The new and expansion developments will add about 9,000 units of new inventory. In the commercial property space, our commercial property group registered a strong performance for the first half, with revenues increasing 18% to 1.7 billion and net income expanding 34% to 833 million. We have 5 completed projects and lease out office developments in our portfolio. SM Cyber West is due to open by late 2013, with our office developments having a combined GFA of 299,000 square meters by the end of the year. We are confident about the growth of our commercial property group, given the continuing expansion of the country's BPO sector. With increased resources of the enlarged SM Prime, we are well positioned to become a leading player in this area moving forward. As for hotels and convention business, we have 4 hotels with a combined 1,019 rooms. These are Pico Sands in Jamilo, Batangas, Taal Vista in Tagaytay, Radisson Blue in Cebu, and Park Inn by Radisson in Davao. We expect increased demand for hotel accommodations from both domestic and international tourists, and in line with this, we are planning to put up more chain of Businessman's Hotel under the Park Inn by Radisson. We have also partnered with the Hilton Group to put up a 350-room, 6-star Conrad Hotel that is now under construction at the MOA complex. In the convention business, we opened SMX Taguig at SM Aura in the first half of this year, which brings our convention and exhibit hall space to over 32,000 square meters, making us, I think, one of the leading players in the industry. To close, building on the success that our various operating units have thus far achieved as independent entities, we have every confidence that, especially now with the country on the path of sustained growth, the new and large SM Prime is uniquely well positioned to pursue the opportunities that the future presents, offering bigger, better, and more innovative developments to the market. Thank you.
Thank you, Jeff. Okay, since we've run out of time, I would have wanted to talk about the CSR operations of SM. foundation. But anyway, we'll be posting this in the website so you can see the updates there as well. Just to reiterate, we have 1,300 scholars, all in college. No, these are like full board scholars for us. I'd like to end the presentation with that and open the floor to questions if there are.
Good morning. Thank you for hosting the briefing. I have a couple of questions on SM development. The pre-sales and launches were given on a units figure. Could we get the first half figures on value of pre-sales and launches?
For first half, I think we had about 12 billion plus in terms of revenues, and I think about 13 billion or 14 billion in terms of reservation.
For this year, are the launches back-ended?
In a way, yes, because sure, we wanted to launch this actually initially in the first half, but we had to do a lot of replanning and in terms of the design. So we decided to just move it to the second half and get everything done in terms of the design, the planning, the documentation.
Okay. Your margins also expanded for the first half. I was wondering if you could give us some idea of the details on how this was accomplished, and should we expect this going for the same figure going forward?
Well, we will continue to improve on the margin. I think the expansion that you've seen is basically just us really going more detailed in terms of how things are being done. As I've said, when I was asked to help out in SMDC, my first task was really more to look at the process internally and try to see where we could generate some savings.
Okay. Finally, on your revenue, the first half figure was growth of low single-digit levels. I was wondering if we could expect maybe double digits in the second half?
Well, with the launching of Shore in about third or fourth quarter, there should be some improvement in terms of the revenues also.
Okay. Thank you.
I think just to Carl, I think you sent me an email actually about the receivables. Just to put it on record and straight, no, the overdue receivables of SMDC 30 days up is actually just 7.5%, not 25% as what has been initially reported. I think our group has actually filed the amended schedules with the Securities and Exchange Commission. So there's no truth to whatever is going out there that we have like a 25% overdue accounts in SMDC. The other thing is that even if we have about 2.5% over 150 days, I don't think that we should be worried about that because, number one, the units are actually still with SMDC and under the name of SMDC. So, if this 2.5% will eventually result to cancellations, we will actually end up recognizing more because we will be able to forfeit whatever payments were made. And then we still have those units with us, which we can sell now at the current price.
Okay, are there other questions? Yes.
I just want to know if you have a pro forma net income for your property group.
Yeah, for revenue actually, on a pro forma basis, it's up 7% to about 31 billion. And in terms of net income, it's up about 14% to about almost 7 billion pesos.
That's 1.4, Jeff. 14%?
Yes, 14%.
Okay. Okay, other questions?
Good afternoon. I'm Cliff from Business World. Do you have the figures for the second quarter performance alone?
We can give that to you later. Yeah, we'll give you the second quarter.
Just a follow-up on the forfeiture. Sir, does the forfeiture apply even if the prospective owner already pays more than 25% or 25% of the contract price of the unit?
Yes, depends on how long has that been in place, no? So if, let's say, he has paid over 20%, and if he comes to us and says that he cannot anymore continue because of financial issues, we usually will discuss with the buyer, depending on the arrangement that eventually we will agree on. It can be the entire amount, it can be part of it.
It's on a case-to-case basis. Would that be the
Yes, yes. We have to evaluate also the conditions of the buyer.
Yeah. Sir, just on the, if the group has an estimate of just how big is the synergistic benefit of the consolidation, like some reduction in the OPEX or anything that would give you a pricing advantage if the consolidation is achieved?
Well, I think you have to give us time on that. We're actually working on the integration now, and it will take probably around 3 to hopefully before the end of the year for us to be able to actually put numbers into the synergies of all the property groups.
Sir, can you also give us an indication of just how fast inventories have built up, those that are ready for occupancy? If indeed there is
right now I think we have around 10,000 or above 10,000 in terms of inventory in our portfolio.
Sir, these are finished and unsold?
Yes, but including the new launching that we will have.
Sir, how does this compare with the past year? Just so we can have a sense of if inventories are building up or if sales and pre-sales are still strong.
Well, actually, it basically maintains that inventory, no? So, for example, if we launch this year certain number of units, we expect take-up also to increase such that inventory will be maintained at that level.
Yeah.
Okay.
Sir, just on the last, on the provisioning, if there is any provisioning on the forfeited units or any on the past due portion of your receivables, if there's any.
Well, we actually have allowance for doubtful accounts in the books right now. That's, I think, about 188 million pesos. But again, as I've said, we provide this more really because we want to be conservative, because the overdue accounts, as I've said, it's not really like we are not able to recover anything because the units are still there and are still owned by SMDC.
So it's just precautionary, 188 million. So
yes, yes.
Thank you.
All right. Are there other questions? Yes. Gio.
Hi, good afternoon. I just wanted to clarify the transaction involving Walter Mart. I was wondering if that really has been closed and if you can provide details. Thank you.
Because there are two transactions to Walter Mart. No? One is the mall side and the other one is the supermarket. On the mall side, yeah, we're actually working on closing. I think should be before the end of third quarter.
Joey?
That's the same thing for a supermarket. That's why we have not incorporated the sales figures of Walter.
Okay. Mr. Shaw, just quickly, why did you do your top-up of 150 and how did that go?
We did the top-up of 150 million US dollars. If you see our debt profile, we have a debt that matured last July, about 250 million US dollar. And then there will be a debt that will be maturing also next year These are the debt bond that we issued in prior years of another $350 million next year sometime September. So we are preparing for that and also refinancing our cash portfolio. I think that's the issue was upsized from $100 million to $150 million on the day. In fact, it was nighttime because of the demand of the subscriber.
Okay. Are there other questions still?
To Mr. Ling, sir, the percentage of OF sales for SMEs?
It's running about 22 to 25%, meaning international sales.
And compared to last year, did it grow or was flat?
There was not much growth, but we're trying to now improve our overseas offices to capture more of this. So we're actually now working on 3 or 4 locations outside where we will have SMDC offices and improving the setup to make sure we're able to capture the sales that are generated faster than what it is now, because the problem that I've seen is that sometimes when an overseas buyer comes in, they have to clear and coordinate with Manila. So sometimes it takes a while.
Okay. Yes, Gio.
Just another follow-up on the Walter Mart question. I was wondering if a venture like this, a transaction like this, is something that you intend to do again in the future if opportunities come, or are you sticking to organic growth? And that's the first question. The second one is, I was wondering if you can provide information on same-store sales growth for the retail business, food and the non-food part, for maybe the second quarter or the first half. Thank you.
Okay, for the first question, we are opportunistic. If there are opportunities available, we'll take a look at it. On top of what we have been doing on our internal, or what we call our organic growth, if there are opportunities, we'll be open, because that's basically our core business.
Jojo, what was your same-store sales in the first half?
I believe it's 1.5%.
For the department store, it's 1.5%. For the food retail?
For the food retail, it's about
2 to 3%. Okay. We'll take one more question before we break for lunch. Yes.
Just going back to the integration of SM Prime and the SMDC SM Group. The question was whether we will have efficiencies, cost savings. I'd like to look at it from a different point of view. The way we do things is by putting them together, we believe that we can do a lot more. And that is how we did with Banco de Oro. When Banco de Oro had merged with the Equitable. It's not just looking at cost savings. Of course, if there are cost savings, we will of course hopefully take advantage of it. But we are looking at from the positive side of putting the group together, and when you see the size and the capability of the group, I believe there's a lot of things we can do there. So hopefully we are giving enough time to work towards that direction. It's going to be a lot of work, but we believe that we can do a lot more.
Okay. On that note, thank you very much for coming. And lunch is served. I'd like to thank all the panelists for also being here. Thank you.